picture gold in India. I mean, it's not just a shiny metal, is it? It's practically a family member, the undisputed star of every wedding, that ultimate emergency asset, tucked away in secret lockers for generations, for centuries. It's been this quiet, powerful presence. But something really fascinating is happening right now. The way people are connecting with gold, well, it's getting a serious upgrade. Today, we're embarking on a deep dive into how this age-old obsession is meeting, like TikTok-level financial savvy. We're going to unpack why gold is not just about the gleam, but a genuine portfolio rock star, and explore the surprising modern twists it's taking, making it more accessible, more dynamic than ever.
It really is remarkable seeing how this deeply ingrained tradition is seamlessly blending with cutting-edge finance. We've meticulously gone through the material you've shared, and it truly paints a vivid picture. Gold is both a cultural heavyweight and, a dynamic financial tool. It proves it's far more than just a shiny object. It's evolution in plain sight.
So buckle up for a ride that's, well, as dazzling as a 24-karat chain and probably as clear as your grandma's advice to buy more gold.
Well.
Okay, let's dive into this golden transformation. We've observed this undeniable truth, haven't we? India has this unique affection for gold, almost like Bollywood loves a grand musical number. For generations, it's been the ultimate status symbol, the dowry deal sealer, the go-to gift for, well, every occasion, from Diwali to celebrating a new baby. It's not just jewelry, it's a legacy, yeah. Handed down like that treasured family biryani recipe everyone tries to copy.
What's particularly striking, though, is the generational shift we're seeing. While, past generations meticulously polished gold for posterity, today's investors, especially millennials and Gen Z, they're evaluating it differently. With the keen eye of a stockbroker scouting the next big opportunity almost, they're approaching gold not just as an heirloom, but as a versatile financial instrument, ready to navigate market volatility. It's a fundamental change, really, in how a sacred asset is perceived.
Right. So is this generational shift we're talking about just anecdotal, or are we actually seeing it reflected in the hard numbers? What's the data telling us?
That's exactly where the data gets so compelling. India's gold demand in 2024, it hit a staggering 813 tons. And here's where it gets really fascinating. Investment demand, specifically for things like ETFs, exchange-traded funds, and mutual funds, it jumped a remarkable 18% year-on-year.
18%?
Yeah, this isn't just for adornment anymore. It's a significant player in the whole investment landscape.
And this cultural bedrock, it seems, has fascinating implications, even in places like the gold loan market. Tell us a bit more about that.
Indeed, yeah. In the gold loan market, where people borrow funds by pledging their gold, companies like Muthoot Finance and Manappuram Finance, they consistently report incredibly low delinquency rates.
How low are we talking?
Often as low as 1–2%, even when gold prices dip sometimes. Which makes you wonder, right? Why such exceptional repayment rates? It isn't just about financial stability. For many, gold represents family honor, long-term security. It's often pledged for crucial life events, weddings, education, starting a business.
Yeah.
So defaulting on a gold loan isn't just a financial loss. It carries deep societal implications. It makes repayment almost a moral imperative for many. This cultural underpinning, it gives gold this almost unparalleled financial power in India.
That's a really powerful insight, that blend of finance and culture. And just to underscore how intense this connection is, did you know India accounts for nearly 25% of global gold demand?
A quarter of the world's demand.
Exactly. That's a huge amount of gold for a nation that's also, rapidly embracing digital payments and exploring crypto. It's truly a dance between tradition and the cutting edge. Now, if the stock market often feels like a bit of a roller coaster, ups and downs, gold frequently steps in with this calming, steady presence. It's what we call a countercyclical asset, meaning it tends to perform well when other things are struggling, a crucial counterbalance in a portfolio.
We've certainly seen that play out time and again. Think back to 2020.
Oh, yeah?
The world was gripped by uncertainty. Economies faced unprecedented challenges. Stock markets tanked. The future felt incredibly uncertain. Gold, however, didn't just hold its ground. It climbed an impressive 25% in value.
25%. Well, everything else was.
Yeah.
Yeah.
Exactly. While equities were having something of an existential crisis, it reliably showed its hedging capabilities during extreme global stress.
And that's not just history, right? It still holds true in today's, well, let's face it, unpredictable world.
Absolutely. Fast forward to 2025, and gold's still proving its resilience. With ongoing global tensions, trade disputes, we've noted gold prices hovering around, 75,000 trons per 10 grams in India. and delivering impressive annualized returns of 12–15% over the past 5 years.
That's really solid.
It is. That's more than just keeping your money safe.
Yeah.
That's actually outperforming many other traditional investment options and actively growing wealth.
It sounds almost like gold is the financial equivalent of comfort food. Reliable, predictable, always there when you're stressed.
Precisely. That's a great analogy. When inflation spikes or currencies wobble, gold often holds steady. It offers a hedge that's often more dependable than, say, your Wi-Fi during a crucial video call.
True.
It provides that essential stability when other assets falter, making it a cornerstone for financial resilience.
And here's a fascinating detail. Even the institutional investors, the so-called smart money with their fancy algorithms, they're still showing a strong appetite for gold. Global gold ETF holdings rose by 85 tons in just the first quarter of 2025, even with whispers about potential price corrections.
85 tons, that's significant.
So what does this tell us? The major players, the big dogs, they're betting on gold because they recognize the world's still, well, a bit unpredictable. It seems while some might be passionately shouting, Ocho DL, hold on for dear life, as their digital assets swing wildly. Gold investors might be found calmly sipping their chai, pretty secure in the knowledge that their portfolio has, like, a golden parachute.
Okay, so gone are the days when investing in gold meant, schlepping to the local jeweler, haggling over purity, constantly worrying about where to keep it safe. Welcome to the 21st century, where gold investment has become almost as convenient as ordering your favorite biryani online. Yeah, we've identified two particularly strong avenues in this modern approach. First up, gold exchange traded funds, or ETFs. These are basically like owning gold, but without the physical burden. No storage issues, no hiding it from curious relatives.
Right.
Each unit typically represents 1 gram of 24-karat gold, and it's backed by actual physical gold stored in these super secure vaults. Think Fort Knox, but designed for easier access. You buy and sell these units on major stock exchanges, just like you would shares in a company. All you need is a demon account to get started.
So what makes ETFs such a strong option? What are the key benefits? We've learned they're incredibly liquid, transparent, and often more cost-effective than buying physical gold. No worrying about storage fees, potential theft, or, whether your jeweler really gave you 24 karat.
Exactly. That purity assurance is key.
Plus, if you hold them for over 2 years, you get that relatively favorable 12.5% long-term capital gains tax. And we saw that gold ETF assets under management in India hit, 35,000 crore in 2024, a 20% jump from the previous year.
35,000 crore. That's a lot of people opting for digital convenience over heavy gold bars.
Makes sense. But, not everyone wants to be actively trading on the stock market.
Right. Not everyone has the time or, frankly, the inclination. Which makes us wonder, what about the investor who prefers a more hands-off approach? The lazy investor, perhaps.
Maybe.
Well, enter gold fund of funds. Think of them as the more relaxed cousin of ETFs. These are mutual funds that, in turn, invest in gold ETFs. So you get all the gold exposure without needing a demat account or constantly checking a trading app.
Okay. So it's indirect investment.
Precisely. You can even set up a systematic investment plan, an SIP, allowing your gold investment to grow steadily on autopilot, like a financial Roomba working quietly in the background.
The main trade-off, I guess, is the cost.
Yeah, the main difference is that these funds typically charge a slightly higher expense ratio because, the fund managers need to get paid for managing it all.
Makes sense.
But for many, the convenience is well worth it, especially for folks who just want to invest, say, $500 a month and pretty much forget about it.
And are they popular?
They are. We've seen gold fund of funds growing at around 15% annually, clearly indicating that even investors who prefer minimal involvement still see the value of having some gold in their portfolio. And if we place this in the broader context, these modern avenues, they really are game changers. They effectively eliminate many of the traditional headaches associated with physical gold. Storage costs, purity concerns.
Or your uncle borrowing your stash.
Exactly. That very real risk of your uncle borrowing your gold for his daughter's wedding and it never quite making its way back.
Been there.
We found that a significant 60% of gold ETF investors in 2024 were actually first-time gold buyers.
60%.
Yeah.
Wow.
And a considerable number came from smaller cities, too, which is a powerful indicator of gold's broadening appeal. Gold is no longer just for the elite or those with easy access to specialized jewelers. It's genuinely for anyone with a smartphone and a vision for financial security. So where is this golden journey heading next? India's gold market is really at this fascinating crossroads, beautifully blending centuries of tradition with the most innovative financial tools available today. The rise of digital gold platforms, ETFs, fund-to-funds, it's all making gold investment as accessible and mainstream as ordering a cup of filter coffee. It's a truly exciting phase for this ancient asset.
What's really interesting, I think, is that profound mindset shift we're observing. Younger investors are actively rewriting the gold playbook. They're treating it more like a strategic financial asset than, solely a sacred relic. We've seen that 40% of gold investment demand in 2024 came from investors under 35.
40%.
Yeah, a demographic far more likely to check a trading app than their family vault. But,
What?
and this is crucial, gold's cultural roots aren't going anywhere. Weddings will absolutely continue to feature enough gold to, well, create a dazzling spectacle. It's this beautiful, dynamic blend of old and new.
Which makes us ask, for you, the individual investor listening, what does this all mean for your personal financial strategy? Our deep dive suggests a pretty clear playbook for incorporating gold. First, diversify strategically. Gold can be your crucial hedge against market downturns. Aim for maybe 5–10% of your portfolio in gold, just to maintain stability, resilience.
Sensible allocation.
Second, choose your investment vehicle wisely. ETFs, great for the hands-on trader. Fund-to-funds, perfect for the set-it-and-forget-it investor. Align your choice with your style.
Know yourself.
Third, think long-term. Gold isn't usually a get-rich-quick scheme. It's a marathon runner, offering stability, a store of value over time. And finally, respect its deep roots. Gold's profound cultural significance in India gives it this unique edge. It transcends mere financial metrics. It's not just an asset, it's interwoven with tradition, emotion. Embracing both sides, financial and cultural, offers a richer understanding and potentially greater long-term benefit.
Gold in India is truly having this transformative moment, and it's clearly not just about its aesthetic appeal anymore. From its deep roots as a cultural icon to its powerful new role as a financial rock star, gold is really demonstrating its ability to adapt and thrive no matter what the world throws at it. Whether you're looking to buffer against global economic uncertainty or maybe just want to add a layer of robust stability to your portfolio, gold offers a really compelling solution. And with the modern tools we've discussed, investing in gold is now, well, a lot more straightforward than navigating some other complex financial decisions, that's for sure.
So maybe pour yourself that cup of chai, open up your preferred investment app, and consider giving gold a serious look. It's far more than just a shiny metal. It could be your ticket to a greater sense of financial calm in a world that's, let's be honest, anything but predictable. What's truly fascinating here is how an asset so deeply tied to tradition, to emotion, can also stand right at the forefront of financial innovation. And this prompts an important question for you to consider. As the global landscape keeps shifting, what other seemingly traditional or tangible assets, maybe even those with strong cultural ties, might be ripe for a similar financial makeover? And, how might that reshape future investment strategies? Food for thought.